Good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is Wednesday. It's May 18th, and it's 7:44 in the morning. The market's going to be opening up in about an hour and I don't even know, an hour and 45 minutes. The Dow's down about 178. The Nasdaq's down 120. Looks like we can have a little bit of a reversal from what we had yesterday. Before I get into the news, just want to let you guys know Target reported numbers, and the numbers were just awful. They were expecting $3.07 per share. They got like $2.19 or $2.16. I mean, the number was dismal. It was very, very bad. This is also below last year's quarter profit of $2.09 billion, and it's bad. It's bad. Very, very bad. If you look at the price of the stock right now, and it'll probably have a drag on the market, the stock is down 23%. Whew! That's a big, big, big haircut. So that'll have some influence on the market. Obviously, Target doesn't have the market capitalization of Apple or Amazon or so forth, but that'll surely put a bearish sentiment or a little bearish cap on today's market action. Now, let's go back and talk about global economy. A lot of things to talk about. So far, aside from Target, positive U.S. retail sales data helped offset concerns that the Federal Reserve might consider more rate hikes to cool inflation. Oil prices rose more than $1. Now they're at $1.10 a barrel, and oil prices in terms of stocks are near all-time highs. The Fed will have to consider moving more aggressively, quote unquote, if inflation that's running at a 4-decade high fails to ease after earlier rate hikes, Jerome Powell said at Wall Street Journal conference. So moving more aggressively if inflation that's running at a 4-decade high fails to ease. I mean, he's all over the place. He should have started a lot earlier. U.S. investors yesterday welcomed U.S. retail sales data showed 0.9% rise in April. We were expecting 0.6 to 0.8, so this is a welcome change. Consumers are providing critical support. They're spending money to U.S. economy despite higher costs for gas, food, and rent. The economy contracted in the first 3 months of the year, but consumer and business spending still increased at a healthy pace. Supply chain problems have prompted businesses to raise prices on everything, as you guys know painfully well from going to the supermarket, from food to clothes to demands that rebound after the pandemic. And again, oil prices have been pushed higher by the war between Russia and Ukraine. We do got to say that the retail sales number was good yesterday. Industrial production was not here nor there. Housing starts is expected in about 43 minutes. That'll be a very interesting number, and that'll give us an indication of whether the higher interest rates are impacting housing starts. I'm expecting it to be a very, very minor set-off. Bond market, believe it or not, is still sideways. I may be, maybe not for long, but it's still moving sideways. And if it starts rallying here, we will know. If it continues the sideways trading action, which it actually started exactly a month ago. We've been seeing sideways trading action for a month. If we continue to see this, or if the bond goes higher, there's a real chance that the worst of the inflationary pressure could be behind us. Don't know if that's the case, but another factor, as I've pointed out to most of you guys, if you look at the communication services, which has been taking this whole S&P down with Facebook, Google, and Netflix, it's now not lagging anymore. On a cumulative, it's now down less than 17, while discretionary is down almost 19. If this continues moving higher, it's going to offer support for the broad market. But as you could see here, we're still bullish. Energy, utilities, consumer staples, and maybe a little bit of basic materials. But this is where the market action is right now. Put the call ratio, as I showed everyone yesterday, let me just kind of go through here. Put the call ratio is still favoring the bulls. In other words, we are still oversold. The market is oversold, needs to bounce. This is why I'm so confident that the market's not going to go much lower before it goes higher. Because look above this green line. Most of the trading action, at least half of the trading action, has been above, which means put buyers have been really outpacing call buyers. But typically when you see action like that, it shifts down, and we haven't seen a shift down to the call buyers since November. So I'm expecting a crazy rally from the market, and I think we're going to get one. It's just a matter of seeing the right catalyst, like the war being put behind this, or the Federal Reserve backing away. Also, volatility. We went all the way to 34. We couldn't break the last peak, which happened in March, but it looks like we may be heading down. If we can get past the next few days, volatility levels could be cooling off, which is also a positive sign in the market. Overall, I'm becoming a little bit. Let me just take a chart here at the Dow, and as you could see here, we've been really rallying the last couple of sessions from deep oversold territory. And I'm actually expecting this to rally. I mean, we may have a couple of down days, that choppiness, but this V turnaround looks very powerful. And I do believe we're going to be hitting the 50-day moving average over the next few weeks. In terms of the technology sector, in terms of the techs are looking a little softer, and we may have to go a little bit lower before going higher. But the blue chips are actually looking pretty good around here. It's just a matter of if we can go a little higher before breaking down once again. Now, we went yesterday up 2%. We're already down 0.75%. So we'll see if this target news will take us down, or if the market shrugs it off and we go up. I believe this is a little too much too fast, down 23%. I mean, ouch. That's a haircut right there. So I do believe that the market overall is set to go higher than lower right now. It's just a matter of time. Now, if you look at momentum levels, which I've been focused on quite a bit, they are starting to move higher. Let me show you this. Let me just give you a picture of this. Sorry about that. Makes it easier to see. We are now back in this territory from this downside. And again, if you look here, we're bouncing off this territory. So I'm not sure if this is a false bounce or if this is a real bounce, but if this is a bounce, we should be moving quite a bit higher pretty quicker, a lot quicker. In terms of top stocks right now, let me see if I can give you the top stocks. For some reason, Stock Fetcher doesn't want to work for me. Let's see if I can turn it on again and get it to work. Now it looks like it's stuck. It gets stuck sometimes. Well, let me show you what I want you guys to look at. Top stock right now. Bottom stock right now. EA. This stock is making a 20-day high. It's at the 200-day moving average, and I think the stock is going to come down. So I would be selling it right between the 132 and 128 levels, and I'm expecting it to come down to the 110 level. To the north side, I started with the short side. To the north side, I like Northrop Grumman. I like defensive stocks. I don't think the war with Ukraine and Russia is done. And I like this consolidation we've been seeing, and it's been above the 50-day moving average. So I think we're going to go for another ride up, especially if the market gets a little bit defensive. We originally recommended this stock back in January 5th at 394, and it's gone all the way to 490. So it gained about 95 points since we called it, but it's been consolidating, and usually after these type of legs up and after a consolidation, we see another run up. So I am expecting another run up in that stock. Let's see if bar charts is finally working for us. It's a weird program. It works, then it doesn't work. There it is. Now, top stocks, as you can see here, same old names. Nothing's been changing. I mean, look at this. We're in May now, since January. Occidental, CF, Devon, Valerio, Mosaic, MCK, Chevron, Marathon, no changes here. Even going down. I mean, Bristol Myers is coming up here. Western Digital, that may be the only tech that's looking good. But for the most part, it's consumer staples, Kraft, Kellogg's, Campbell Soup, and tech. That's all that's up here. On the bottom, we're still seeing Netflix, Align, PayPal, Etsy, Under Armour, Dish. Nothing good is happening over here. So the segment of the market, aside from seeing communication services go to second spot, and I'm hoping it's going to go higher, not really seeing much of a change to the overall market structure, and looking for the market to continue moving higher. We're really overdone to the downside. So I think we're going to be going higher instead of lower. Now, again, Northrop, NOC to the upside. Nice little potential here. Stop loss, I would put all the way below this level because markets are really volatile right now. And EA, I would put a stop loss somewhere around the 140 level, and I would go short on this. Be careful, option liquidity may be a little bit low. Now, before I let you go, after a long, hard battle in some of the toughest stock market conditions we've had in the past decade, I believe The white flag has finally starting to rise. The worst has finally come and gone. And if you're standing around with your hands in your pockets and not sure what to do next, I want to help you guys. There's one key market indicator that's our saving grace right now. And I've decided to share everything it has to offer in my VIP room today, 2 p.m. Eastern Time, open house. It'll be great. I just came off a 2.5-day class for my algo program, and I can't wait to do this. I want you guys to register, sign up, check this class out. If you can't follow it, find the link. Go to the YouTube Wealth Press channel. It's in the descriptor. Tomorrow, top ETF, top options. I'm going to give you strike prices, exercise dates. Follow the link. Check it out. I want to see you in my VIP room today at 2 o'clock Eastern Time. Bye, guys. Have a great day. Send me some love letters. support@marketgeeks.com. I want to know if I've been helping you. Or post some good comments in the chat in the YouTube channel. I want to see them. Bye, guys. Have a great, great day.